Welcome to the deep dive. Today we're tackling a really fascinating question that came from you. How do certain influential figures shape the changes we see, particularly in the often turbulent worlds of economics and finance?
Hmm.
To help us explore this, you shared some compelling material excerpts from the Gloom, Boom, and Doom report. Specifically, we're looking at an essay by Patrick McKim titled, Is Change Progress? How Change is Moved by Certain Intellectuals and Manic-Depressives, using liquidity, technology, and mass movements, along with Mark Faber's own investment thoughts from January of this year.
Yeah, this is a potent combination. McKim's piece offers a rather critical lens through which to view those who drive change in our financial and societal landscapes,
Yeah.
while Faber's observations give us a current perspective on the market and, where things might be heading.
So our mission today is to really dig into the arguments presented in these sources. We want to understand how they characterize these powerful individuals, intellectuals, and manic depressives, and analyze the impact they're seen as having on both the markets and um, significant shifts in society.
Uh-huh.
And crucially, we'll be connecting these ideas to the economic climate we're currently navigating and what that might suggest for investments.
Mm.
We're aiming for a clear understanding of these perspectives without getting lost in, like, academic jargon.
Good plan.
Okay, so let's get right into it. The report kicks off by examining this idea of the intellectual. And it doesn't exactly pull any punches, does it?
No, it really doesn't.
It even starts with a quote that questions whether intellectuals talk about everything but understand nothing.
It certainly establishes a skeptical viewpoint right away. The report immediately asks if these figures, who often claim, a leading role in society, actually possess genuine understanding. It even references historical perspectives that caution against the limitations of those who profess to lead.
And it makes a really interesting distinction by putting these intellectuals side by side with doers, using Jim Cramer as an example. Now, the report isn't necessarily endorsing every single call Cramer makes.
Right, the Bitcoin example gets.
Exactly. The Bitcoin example where he advised selling before a significant price surge reminds us of the market's unpredictability and how even seasoned commentators can have differing views.
Sure.
But the key point here seems to be that Cramer offers clear, actionable financial advice, which is different from the more abstract pronouncements they associate with intellectuals.
Exactly. The report uses that contrast to highlight a core difference it perceives. Intellectuals are presented as primarily operating in the realm of ideas, whereas someone like Kramer is actively engaged in the practicalities of the financial world.
Hmm.
It's setting up this idea of a divide between theory and, hands-on experience, perhaps with a slight leaning towards valuing that practical engagement.
Then the essay goes deeper into defining just who these intellectuals are, drawing on a really interesting collection of thinkers like Eric Hoffer, Will and Ariel Durant, Paul Johnson, and Thomas Sowell. What were some of the main characteristics they linked to this group?
Well, a central theme that emerges is this sense of entitlement. The feeling among those who see themselves as part of an educated minority that they have a right, maybe even an obligation, to guide society.
Okay.
However, the essay is quick to clarify that being labeled an intellectual in this context doesn't automatically mean someone is, highly educated or particularly intelligent. It's more about this self-perception of belonging to a knowledgeable elite.
Right, this feeling of being part of an educated minority. And the report points out other traits, such as being self-validating, finding their own sense of importance within their intellectual circles, and being quick and adaptable in their thinking. But a really critical point the essay makes is that they're often not held responsible for the real-world consequences that might arise from their ideas.
That lack of direct accountability seems to be a major concern highlighted in the report. It also suggests that intellectuals have a strong desire to be heard and to feel significant. And somewhat paradoxically, they might even feel marginalized or misunderstood in democratic societies where their authority isn't automatically accepted.
Interesting.
This, according to the essay, can lead to a tendency towards dissatisfaction and social criticism.
And then they bring in Nassim Taleb's concept of the intellectual yet idiot, or IYI. That's a phrase that sticks with you. What's the main idea behind it?
Yeah, the IYI, as the report describes it, is someone who possesses high intellectual capabilities but lacks practical wisdom and, crucially, has no skin in the game.
Oh, okay.
They can theorize and critique from a distance without personally experiencing the real-world repercussions of their proposed solutions or criticisms. It's that disconnect between abstract intellect and tangible outcomes that Taleb, and by extension this report, identifies as a significant problem.
So what this really boils down to for us is to be wary of advice from those who don't bear the consequences of their recommendations.
Pretty much. It's a reminder to look for skin in the game when evaluating expert opinions.
The report also touches on a potential moral weakness in intellectuals, referencing Stockdale and Benda. What's the concern being raised there?
The worry is that an intellectual's desire for acceptance and admiration within their peer group can sometimes lead them to compromise their principles in the pursuit of power or influence.
Yeah.
It's the idea of shifting from a pursuit of truth or knowledge to becoming someone who manipulates ideas to gain favor or advance a particular agenda, as Julian Benda discussed in his book, The Treason of the Intellectuals.
Okay, so a pretty critical view of intellectuals as presented in the report. Now, the essay takes a rather unexpected turn by drawing parallels between intellectuals and manic-depressives, or individuals diagnosed with bipolar disorder. That was quite a striking connection.
It really was.
What similarities did they highlight?
The report references the diagnostic criteria from the DSM-5, which is the standard manual, used to classify mental disorders,
Okay.
and lists characteristics of a manic episode, such as elevated mood, increased energy, and goal-directed activity, inflated self-esteem or grandiosity, being more talkative than usual, racing thoughts, and engaging in risky behaviors.
Okay.
It then suggests that these traits can, in some ways, mirror characteristics observed in certain intellectuals. The underlying connection seems to be this shared tendency to push boundaries and, well, take things to an extreme.
And it mentions some really significant historical figures in this context, like Napoleon and leaders from World War II. That's certainly thought-provoking.
Yes. The report enters a somewhat speculative area by suggesting that historical figures like Napoleon, Hitler, Mussolini, Stalin, and even Churchill may have exhibited manic tendencies. It goes on to suggest that these traits were associated with periods of significant upheaval and destruction. It's a controversial point, absolutely, but it serves to illustrate the report's argument about the potential for individuals with these characteristics to have a profound impact, whether for good or, as in these examples, perhaps for ill.
The essay also notes the overlap between intellectuals and individuals with bipolar disorder in creative fields. Why does the report bring that up?
The point here seems to be that both groups can exhibit high levels of creativity, intense focus, and periods of heightened energy. The report suggests that this isn't just a coincidence
Okay.
and implies that some of the same underlying drivers, maybe a willingness to break from conventional thought, rapid and associative thinking, might contribute to both intellectual pursuits and artistic expression, as well as the manic phases of bipolar disorder.
And then the report discusses individuals with potentially manic traits in the business world, particularly in tech and Wall Street, suggesting they might thrive during periods of market exuberance or bubbles. What's the reasoning behind that?
Well, the idea is that the heightened energy, optimism, and increased risk-taking behavior associated with mania can align well with the speculative nature of market bubbles.
All right.
The report even includes a quote from a venture capitalist who suggests that someone with manic-depressive tendencies might be particularly adept at selling at the peak of a booming market. There's this implication that they possess a certain temperament that allows them to ride the wave of what might be considered, irrational enthusiasm.
This is all painting a picture of certain personality types having a significant influence on how change unfolds. Then the report introduces another group it calls controligarchs. Who are they in this framework?
These are defined as the extremely wealthy individuals who also operate with a belief that conventional rules and constraints don't apply to them.
Okay.
The report argues that they share certain traits with both intellectuals and those exhibiting manic tendencies, particularly a sense of being infallible and a strong desire to chart their own course, often disregarding traditional wisdom or potential negative consequences.
So how do these controligarchs differ in their influence compared to the intellectuals we discussed earlier?
Well, the report suggests their power comes more from their vast wealth and ability to direct resources, whereas intellectuals primarily wield influence through ideas.
Got it. And the report even includes quotes from Bill Gates and George Soros to illustrate this point. What were those quotes about?
The reported Gates quote offers a somewhat whimsical, almost self-proclaimed understanding of the universe, while the Soros quote explicitly mentions feeling like some kind of god
Right.
and not accepting rules imposed by others. The report uses these excerpts to support the idea that these controligarchs possess a similar sense of exceptionalism and a strong desire to shape the world according to their own unique vision.
It seems like the essay is building an argument that these three groups, intellectuals, Individuals with potentially manic traits and control oligarchs are key drivers of change, often in ways that aren't necessarily for the better, at least according to this source.
That's the thrust of it, yeah.
Then it shifts to discussing professions that tend to attract intellectuals. What kind of fields does the report highlight?
The report points to fields that heavily involve ideas, written communication, and subjects that are open to interpretation or creativity. So, writers, actors, artists, philosophers, and lawyers working within interpretive legal systems.
Okay.
Academia, with the notable exception of the hard sciences, is also identified as a prominent area, particularly the soft sciences like environmental studies, sociology, behavioral science, political science, and economics.
And why those fields specifically?
Well, the report suggests these fields offer a haven for intellectuals due to what it perceives as a relative lack of direct accountability for tangible outcomes.
It emphasizes a contrast between these fields and professions that have more direct feedback loops and accountability, like hard science, the military, and engineering, even using Albert Einstein as an example of an accountable intellectual. What's the core difference the report is trying to highlight for us?
The key difference seems to be the presence of clear feedback mechanisms and measurable consequences in fields like hard science and engineering. Einstein's theories, for instance, were rigorously tested against empirical evidence.
Right.
In contrast, the report argues that many intellectual pursuits lack this immediate and direct accountability, which can allow theories and ideas to persist even if they don't effectively translate into positive real-world results.
And then the report discusses a perceived erosion of these feedback loops in areas like medicine, economics, finance, and general business. What factors does it suggest are contributing to this erosion?
The essay attributes this weakening of accountability to factors such as loose monetary policy, where the easy availability of money can kind of mask poor decisions,
Uh-huh.
the pressures within bureaucratic environments to prioritize profit or metrics over genuine value creation, maybe intellectually dishonest leadership, and the control over information, which can limit dissenting views.
And it gives examples.
Yeah, examples like the intense focus on beating the quarterly earnings number in corporations and the hype surrounding unproven next big things are mentioned as symptoms of this broader lack of true accountability.
Essentially, this means when central banks make it easier and cheaper to borrow money, it can sometimes distort the signals that would normally indicate whether an idea or a business is truly sound.
Exactly. It muddies the waters, you could say.
Now, to really bring these abstract ideas down to earth, the report includes several case studies. Let's start with John Maynard Keynes, the influential economist. How is he presented within this framework of the intellectual?
Keynes is portrayed as, well, brilliant, but perhaps somewhat insecure intellectual whose desire for recognition might have occasionally influenced his judgment. The report points to his inaccurate prediction regarding the duration of World War I as an early instance of him being significantly incorrect. More importantly, it critiques his Keynesian economic theories.
Right, the spending theories.
Yeah, suggesting that while they might offer short-term political advantages through increased government spending, they can lead to detrimental long-term consequences by encouraging excessive debt accumulation.
And the report even brings in that well-known quote from Dick Cheney, "Reagan proved deficits don't matter," as an example of politicians maybe misusing Keynesian principles.
That's right, or at least taking a very selective interpretation.
And California's current budget challenges are also mentioned in this context.
Yes, California's situation is presented as a contemporary example of the potential downsides of this approach, according to the report. The state experienced significant surpluses due to federal funding during the COVID-19 pandemic,
Okay.
but then substantially increased spending. As those temporary revenue streams have dried up, California now faces a large structural budget deficit. The report frames this as a failure to adequately consider the long-term implications of short-term spending increases.
The next case study focuses on Alyssa Heinerscheid and the Bud Light marketing campaign. She's described as a pseudo-intellectual. What does the report suggest went wrong there?
Heinerscheid is depicted as someone who embraced certain progressive ideologies without perhaps a deep understanding of Bud Light's core consumer base.
Okay.
Her focus on promoting inclusivity and attempting to shift the brand's image away from what she perceived as its traditional, maybe fratty appeal is seen as alienating the long-standing Bud Light drinker.
And the results were pretty dramatic, right?
Yeah, the report highlights the significant and rapid decline in sales volume as a direct consequence of this disconnect between her intellectual leanings and the market reality.
It seems like the essay really emphasizes her educational background institutions like Harvard and Wharton as potentially contributing to a certain wokeness, as they put it, that was out of touch with common sense and the brand's established market.
Yes, it suggests that.
And they even draw a parallel between her approach and Larry Fink's comments about BlackRock needing to force behaviors.
Exactly. The report suggests that both Heinerscheid and Fink might represent a mindset prevalent among certain elites who attempt to impose their values and beliefs on a wider audience, often with negative consequences for the organizations or businesses they lead.
Right.
The Bud Light case is presented as a clear example of the market pushing back against this kind of top-down ideological imposition.
Finally, the report examines Jeffrey Skilling of Enron, characterizing him as exhibiting manic characteristics. How does it suggest those traits contributed to Enron's eventual collapse?
Skilling's reported brilliance, arrogance, and tendency to prioritize intellectual constructs over practical realities are highlighted as mirroring traits associated with mania.
Hmm.
His intense conviction in his ideas, his apparent intolerance of dissenting opinions, and his focus on abstract financial engineering rather than the fundamentals of the business are seen as key factors that led to Enron's fraudulent practices and ultimately its downfall.
And that quote about him being a designer of ditches, not a digger of ditches.
Yeah, that quote attributed to someone familiar with him really captures this idea of prioritizing theoretical design over practical implementation and oversight. His reported inability to admit being wrong also fits this picture the report paints.
So these case studies serve as cautionary tales, illustrating what can happen when these types of individuals, the intellectual detached from practical concerns, the pseudo-intellectual driven by ideology, and the individual with potentially manic tendencies, hold significant sway, according to this analysis.
That seems to be the message, yes.
Now, the report moves into this really interesting concept. It calls the intellectual preference for the perverse opposite. What's the core idea behind that?
The essay argues that intellectuals often show a tendency to favor ideas that run counter to human nature, maybe evolutionary biology and common sense. It references George Orwell's concept of doublethink from his novel 1984.
Okay, doublethink.
Yeah. The examples provided, such as the idea of prioritizing the security of other nations' borders over one's own, or the ongoing debate surrounding transgender athletes competing in women's sports, are intended to illustrate this inclination to promote notions that seem inherently counterintuitive, at least to the author.
And the allegory of the Argentine army officer and the backwards billboard placement was a particularly vivid way to explain this concept. Could you briefly recap that for us?
Certainly. The anecdote describes an officer who proposed renting billboard space on the sides of buildings facing away from the main flow of traffic on a busy avenue.
Right, which seems useless.
Exactly. When his colleagues questioned the visibility, his response was to then advocate for reversing the direction of traffic on the entire avenue, thus creating prime advertising space where there was none before.
Ah.
The report uses this somewhat absurd scenario to illustrate the intellectual tendency, as it sees it, to value radical novelty and to seek the creation of new markets or solutions, even if it means fundamentally disrupting existing norms and common sense in a convoluted way.
That's a really thought-provoking image, isn't it?
Right.
It makes you wonder how often seemingly nonsensical ideas might actually be driven by a desire to fundamentally reshape the landscape, sometimes perhaps for personal gain.
Or at least for the sake of being novel.
The report connects this tendency to areas like transsexual transitioning, mRNA vaccines, and the push for electric vehicles, suggesting these are examples of intellectuals turning part of society on its head and potentially creating new profit opportunities.
Yes.
And it even mentions A.G. Garland's son-in-law's reported profits related to critical race theory through government influence.
Yes, the report explicitly draws a connection between these various areas and the idea of government policies potentially enabling and promoting change that disproportionately benefits those who are aligned with these perverse or unconventional ideas, again, according to this viewpoint. It's a critical perspective on the underlying motivations and potential consequences of certain types of significant societal shifts.
The essay then shifts its focus to discussing conservatism, the nature of change, and the crucial role of feedback mechanisms. How does it position conservatism in relation to the intellectual drive for radical transformation?
Conservatism is presented as offering a more measured and orderly framework for change, one that is primarily driven by market forces and subject to continuous feedback and adaptation,
Okay.
as opposed to change that is imposed by intellectual decree or top-down planning. While it acknowledges Friedrich Hayek's essay, Why I Am Not a Conservative, the report emphasizes Edmund Burke's concerns about the inherent dangers of radical and unchecked change.
Right, Burke and the French Revolution.
Exactly. It draws parallels between the French Revolution and certain trends in the contemporary environment.
That quote from Burke about the lack of respect for the wisdom of others and the preference for the new really stood out as particularly relevant.
It does. The report highlights Burke's warning against the tendency to dismantle established systems and traditions simply because they are old, without carefully considering the potential long-term ramifications of hastily constructed replacements.
It underscores the inherent value in accumulated wisdom.
And the importance of understanding the reasons behind existing societal norms, exactly.
And the report also brings in Will Durant's perspective on the potential for intellect to be destructive. What was his take on this?
Durant is quoted as suggesting that the vast majority of novel ideas, he estimates maybe 99 out of every 100, are likely inferior to the established practices they aim to supplant.
Wow, 99%.
Yeah, he emphasizes the idea that no single individual can possess the depth of understanding that is embedded within the customs and institutions of a society, which are the result of generations of trial and error and historical experience.
The report even includes that rather blunt quote attributed to Napoleon. Yeah. You don't reason with intellectuals, you shoot them.
Oof. Yeah, that certainly underscores the historical tension between intellectual movements and established power structures.
And then the report goes on to contrast President Eisenhower's approach to managing change with that of subsequent administrations.
Eisenhower's approach is portrayed as one of carefully managing change and prioritizing the prevention of conflict, in contrast to what the report implies was a more interventionist and perhaps ideologically driven approach in later administrations.
Mm.
There's a subtle suggestion that Eisenhower understood the potential pitfalls of rapid, intellectually motivated societal engineering.
And the report makes a rather strong claim about a historical link between periods of hyperinflation and doublethink intellectual ideas as contributing factors to government instability.
Yes, the report argues that throughout history, many instances of significant government instability in Western nations have coincided with periods of hyperinflation occurring alongside the ascendance of radical intellectual ideologies.
Interesting correlation proposed there.
It even suggests that the relative prosperity of the United States in its earlier history was largely due to it not being significantly influenced by the kind of intellectual dominance it describes.
This is all quite a sweeping and critical perspective. Now, the report transitions into making specific investment observations, using the state of California as a really interesting case study. Why the focus on California in this context?
Well, California is presented as a canary in the coal mine, so to speak,
Okay.
because it has been a leading center for both technological innovation and progressive social and political thought for decades. The report argues that its current economic challenges, despite its outward image of prosperity and innovation, serve as an important warning sign for other states and potentially even the federal government.
And the main signs are.
The significant budget deficit the state is facing, coupled with increasing rates of immigration, are highlighted as key indicators of underlying structural problems.
And the report delves into the specifics of California's budget issues, the reversal of temporary federal funding related to the COVID-19 pandemic, declining tax revenues, particularly from capital gains due to a cooling housing market and fewer IPOs, alongside increased government spending on areas like addressing homelessness. The default on the state's unemployment fund loan and the ongoing issues with the high-speed rail project are also mentioned. It certainly paints a concerning picture of the state's fiscal health.
It does. The report emphasizes the structural nature of California's budget deficit, suggesting that it's not simply a temporary downturn.
Right.
The fact that conservative groups are pushing for a constitutional amendment that would require a two-thirds majority for any future tax increases, and the current governor's reported attempts to block this measure, further underscore the severity and the political divisions surrounding the state's fiscal challenges.
And San Francisco's situation is described as even more precarious.
Apparently so. Several contributing factors are suggested. The widespread completion of the transition to cloud-based computing infrastructure, maybe a decrease in spending related to remote work setups as the pandemic's immediate impact recedes,
Okay.
and increasing cost pressures on technology companies themselves. Additionally, the report expresses a degree of skepticism towards the current hype surrounding artificial intelligence.
Ah, the AI hype.
Yeah, suggesting that the real-world applications and profitability of AI might not quite live up to the current market expectations.
And drawing on all of these observations, the report offers some fairly strong investment recommendations, particularly in relation to technology stocks. What's the main takeaway for investors?
Well, the report expresses significant concern about the current valuation of many technology stocks, especially those with high price-to-sales ratios but low or no actual earning.
Okay, so high sales, no profit yet.
Exactly. It advises investors to be very cautious and potentially avoid these overvalued companies, suggesting they are at high risk of experiencing substantial losses during an economic slowdown or a market correction.
And just to clarify for listeners, price to sales ratios, that's a way to value a company by comparing its current stock price to its total revenue, right?
Yeah.
Useful for companies maybe not yet profitable.
Precisely. But the report warns that a high ratio without profits can be a danger sign.
The report also discusses the United States' weakening position as a global leader and goes as far as to predict a significant fall in the value of the U.S. dollar against the Brazilian real. That's a pretty specific and bold call.
It is pretty bold, yeah. The report argues that a combination of economic vulnerabilities, perceived military weakness, maybe a decline in international trust, and domestic political instability in the U.S. are leading to a shift in global liquidity flows.
And the 20% prediction.
Yeah, the prediction of a 20% depreciation of the U.S. dollar relative to the Brazilian real is presented as a concrete example of this broader trend they foresee.
And a major theme is the anticipated shift in market leadership, away from the technology sector and towards areas like emerging markets, precious metals such as gold, and broader commodities.
That's correct. The report anticipates that as the previously high-flying technology sector potentially falters, investors will seek out undervalued assets and sectors that could perform better in a potentially inflationary or stagflationary economic environment.
Which are?
Emerging markets, gold, and essential commodities are highlighted as potential beneficiaries of this shift in investment focus.
Finally, the report raises concerns about the municipal bond market's potential negative reaction to California's fiscal difficulties,
Uh-huh.
and even suggests a scenario of a checkmate for the Federal Reserve if it attempts to simultaneously control both short-term and long-term interest rates, potentially leading to a surge in inflation and a sharp decline in the value of the U.S. dollar. That sounds like a significant risk.
It is. The report outlines a potentially challenging scenario where the Fed's ability to effectively manage the U.S. economy and maintain the stability of the currency could be severely hampered by the interplay of government fiscal problems and broader market forces.
The report concludes its investment insights by contrasting these rather pessimistic views with some more optimistic forecasts for the S&P 500 index in 2024 that have been put forth by other analysts. It seems to be positioning its analysis against that more bullish consensus.
Yes, while acknowledging the existence of these more optimistic outlooks, the report leans towards a more cautious, even bearish, perspective on the overall U.S. equity market.
And the reasons for the caution.
It cites concerns about potential profit contractions for companies due to a weakening U.S. economy, discrepancies between GDP and GDI, gross domestic income data, which can sometimes signal underlying economic weakness, and a contraction in the manufacturing sector as indicated by the Purchasing Managers Index. The report also notes concerns about a contraction in global trade and deflationary pressures coming out of China.
And despite the recent upward movement in long-term U.S. Treasury bonds, the report advises caution regarding them due to the prevailing inflationary policy environment.
Right. They see inflation as a persistent risk.
And while rapid interest rate cuts by the Federal Reserve could potentially provide some support to equity markets, the speculative technology sector is still considered to be excessively expensive.
Exactly. So the investment focus shifts towards sectors that have been somewhat overlooked and are currently trading at more attractive valuations, like value stocks in the energy sector, gold mining companies, and financials, as well as the broader emerging markets. The report notes the significant recent inflows into the SPDR S&P 500 ETF as potentially unsustainable, suggesting that investor sentiment might be overly concentrated in a few large-cap stocks, often referred to as the Magnificent Seven.
The report specifically points out the relatively low valuation of the energy sector compared to its historical peaks and the potential investment opportunity. Supported by data showing commercial traders reducing their short positions in energy futures. And it suggests that gold and silver mining companies are undervalued relative to the physical precious metals themselves.
Right, a potential leverage play there.
Even mentioning specific minor ETFs and individual stocks as potential considerations Platinum is also highlighted as a preferred precious metal for investment in 2024.
These are presented as potentially contrarian investment ideas, sectors, and asset classes that haven't seen the same level of investor enthusiasm, but could offer significant upside potential in the anticipated economic environment.
Any other areas?
The report also mentions the depressed valuations of commercial real estate equities in Hong Kong and Singapore as a potentially interesting area for longer-term investors.
And the report anticipates that Latin American and other emerging markets are likely to experience an upward breakout, aligning with the expected upturn in commodity prices.
Yes, the expectation is that as the global economy potentially shifts and commodities become more in demand, emerging market economies that are significant producers of these raw materials could see improved economic performance, and consequently, their financial markets could outperform developed markets.
Given all the uncertainty and potential for market shifts, the report suggests considering the purchase of long call options on the VIX index as a way to potentially hedge against or profit from increased market volatility in 2024.
Er,
For those unfamiliar, the VIX index is often referred to as the fear gauge of the market.
That's a specific tactical suggestion for navigating what is expected to be a more uncertain and potentially volatile market environment. The report also reiterates the potential for the U.S. dollar to weaken further against commodities and precious metals if the Federal Reserve pursues further monetary easing policies.
The report concludes its investment outlook with a stark warning about the potential risk of outright deflation in 2024 and the devastating impact that could have on highly inflated financial assets.
Yeah, deflation is seen as a real, though maybe less discussed, risk.
And that final quote provided about everything being backwards, with doctors destroying health, lawyers destroying justice, and so on, it certainly leaves you with a provocative thought about the current state of affairs.
It does. The report wraps up by emphasizing that genuine and beneficial change is ultimately validated by the mechanisms of free markets, not by government intervention or the agendas of intellectuals, in its view.
Right.
It concludes with the strong statement that change for the sake of change and intellectual aggrandizement leads to malinvestment and tragedy, with the author even suggesting that intellectuals can be more detrimental to society than even economists.
Wow. Well, you've joined us for a truly in-depth exploration today as we've unpacked the perspectives presented in your sources on the characteristics of potential influence of intellectuals, those exhibiting manic traits, and control oligarchs on the significant societal and economic shifts we observe.
We covered a lot of ground.
We did. We've examined how these viewpoints connect with historical events and the current state of the markets, particularly through the lens of inflation, technological advancements, and the role of government intervention, using California as a particularly illustrative example.
Indeed. As you, our listeners, reflect on the dynamics we've explored, perhaps you'll consider the underlying forces driving the changes you see unfolding in the world around you. To what extent do you recognize the influence of the types of figures described in these sources in shaping current trends and events?
This deep dive has offered a specific and at times critical perspective on complex issues. We encourage you to consider these ideas further. Perhaps explore the works of the various thinkers mentioned in the report, or examine current events through this unique lens. What other historical examples might either support or challenge the perspectives presented? And what could be the practical implications of these ideas as you navigate the current economic landscape?
These are just some of the questions that might spark further independent exploration.
Thanks for taking this deep dive with us.